So hello all. In this session, in the previous session, we were discussing about the method of transfer pricing. We also discussed about like the basics of transfer pricing, why transfer pricing is required. All those things were discussed in the previous class. So in the current class, what we are planning to discuss is the other methods of transfer pricing, computation of ALP, right? So the resale price method, transactional net margin method, profit split method, and cost plus method. So these four methods we'll discuss in the current session. And also நம்ம என்ன பண்ணுவோம்னா இந்த அஞ்சு மெத்தடுக்கும் what is the link between these methods and how can we simply remember these methods அப்படின்ற ஒரு பாயிண்ட் we'll just see in this current session, right? So we have seen cup method. So cup method is there in the previous video. If you have missed that video, I would request you to watch the part 1 video and then come to this part 2 video, for a simple reason that without understanding why transfer pricing is required, we might not be in a position to appreciate the different methods which we are going to discuss now, and also the table which we'll discuss at the end, right? So now we are going to discuss the second method. So if you just see here, we were seeing totally there are 6 methods. If you just leave the any other method, totally there are 5 methods. Adala comparable uncontrolled price method is already discussed. So this method is already discussed. Now we have to discuss resale price method and cost plus method in the transaction based methods, right? So first, what is resale price method? Resale price method is simply that, assume for example I am selling a good, right? Assume for example if I am going to sell a good which is purchased from an associated enterprise. I am selling a good which is purchased from an associated enterprise. So what I'll do is, and the sales is to a non-associated enterprise. For me to use resale price method, two conditions are to be primarily satisfied. My purchase should be from an associated enterprise. My sale is to be done to a non-associated enterprise. If both of these conditions are satisfied, I can use resale price method. In resale price method, what we'll do is we'll use the resale price, that is the price which is sold to the third party, to arrive at the arm's length price. So assume for example, let us go to the screen. What screen? Yeah. Assume for example, we'll take the trading account. Okay, wow. Color screen black. Yeah. Screen is 110 and I will try. Yeah. So assume for example this is a trading account. So trading account la, just for example trading account. Here what will be there? Here there will be sales. Correct? And here it is going to be cost. X. Okay. So this transaction is with A. The specified transaction is with an associated enterprise. So this is cost and purchase. This purchase is from an associated enterprise. Since it is from an associated enterprise, what we know for sure, in the resale price namak already ennandrathu theriyum, since it is sold to the third party. So if resale price is known, assume for example I also know gross profit. Obviously I should know, I know what is my cost, what is the sales, and other expenses, other direct expenses, right? If I know these three, can I not compute this as the balancing figure, the cost? If in the cost we can find this by balancing figure. So this is going to be the balancing figure. Okay, wow. This is simply the resale price method. If you just see here, this is the computation table which is given. So first what I should do, I should take the resale price charged. Okay, wow. From the resale price charged, I should reduce the gross profit margin. Of adhalarundu, I should reduce the expenses which is in connection with the purchase of property or service. In the term expenses ni use பண்றாங்க, but that does not purely mean it is only for, it is for the cost of purchase. It is for all the expenses other than purchase cost மட்டும் தான் இங்க வரும். Okay. Next, adjustment for opening and closing stocks. Let us go to our example itself. And the example நீ பார்த்தனா In a normal trading account, we are going to have opening stock and closing stock also. So in a normal trading account, we are also going to have opening and closing stock. So that being the case, that should also be adjusted is what is being said here. Next is all functional differences. This is going to be common in all the methods of transfer pricing. Okay, wow. So very simple. For me to apply resale price method, the transaction should be, the sale should be to a independent party, third party, and my purchase should be from a associated enterprise. If both of these conditions are satisfied, using the price which I sold to the third party, I can determine the price which is arm's length. So basically, when a sale is to a third party, so that is at arm's length without doubts. So if I'm going to reduce from that sale a normal gross profit margin on all the other expenses, what I'm going to get a normal arm's length price for the purchase. So we are going to arrive at that figure as a balancing figure, nothing more than that, right? So that is in relation to a resale price method. So resale price method generally it is to be adana சொன்ன மாதிரி அந்த ரெண்டு கண்டிஷன் satisfy ஆகணும் and ஒரு list of transactions மாதிரி resale price method it is not there, and that is not a very big widely used method also. So if you just see in the industry's practice what methods are being widely used is first is comparable and control price will be used. First will be TNM, not even cup. First will be TNM, which we are going to see subsequently. Second will be cup. Third will be other method. Only then this resale price method, profit split method, cost plus method, all these will come. Okay, va? Now let us go to the next method of transfer pricing, which is cost plus method. So இப்போ resale price மெத்தடுக்கு நம்ம என்ன சொல்லியிருந்தோம், purchase should be from a associated enterprise, sale is to be to a third party அப்படின்னு சொல்லியிருந்தோம் இல்லையா. இதில் அப்படியே ரிவர்ஸ், இதில் it is going to be opposite of this. First, let us read what is given in the slide. So, comparable gross markup is added to the cost incurred by the supplier of goods and services in relation to a third party. Here, sale is to be to a related party. In cost plus method, sale when the related party kuda irukkanum, all the purchases should be from unrelated parties. Resale price method la appade opposite cost plus method. Okay, here sale is to be to the related party, all the cost is to be to the unrelated parties. Okay, see the second box, to be used in cases of supplies of a property or service to an AE. AE means associated enterprise, and not to be used when the enterprise is in receipt of property or service from an AE. If I'm going to receive the services, if it is going to be my cost, I have to use resale price method and not cost plus method. If I have to use the cost plus method, my sale is to be to the associated enterprise. இவ்வளவுதான் resale price method க்கும் cost plus method க்கும் difference. Generally, it is used in transactions involving a contract manufacturer. In the low risk manufacturer, there is a concept in transfer pricing. What do you mean by a low risk manufacturer? Generally, while you are studying a transfer pricing, studying a transaction for the applicability of transfer pricing, what you will see is what is the FAR analysis of that specified transaction. So FAR analysis na enna, functions perform, asset employed, risk assumed. Either based panni will determine what is the risk which is involved for the enterprise in this specified transaction. All these will not be tested in exams for sure. Be very sure about that, because these are very technical concepts that what is the FAR of an enterprise, all those things will not be is going to be discussed in your examinations. But while you are entering into practice and you are getting into some interviews, you should know all these things, right? So generally, based on functions performed, assets employed, and risks assumed, will determine what is the risk which is being taken by a specified entity. We already know higher the risk, higher the return. இப்போ low risk அப்படின்னா என்னன்னா, so the company has very low level of risk which is taken in that transaction. இப்போ ஜென்ரலா ஒரு டிரான்சாக்ஷன்ல ரெண்டு பேர் இருப்பாங்க. One is, assume for example, there is an Indian entity, there is a foreign entity. Goods are sold by this Indian entity to the foreign entity. Goods are manufactured by this Indian entity and it is sold to this foreign entity. ஒரே ஒரு கஸ்டமர் தான். இப்போ இந்த கேஸ்ல என்ன ஆகும், வாட் எவர் இஸ் பீயிங் ப்ரொடியூஸ்டு பை திஸ் இந்தியன் என்டிட்டி வில் பி பர்ச்சேஸ்டு பை திஸ் ஃபாரின் என்டிட்டி. இப்போ இந்தியன் என்டிட்டிக்கு என்ன ரிஸ்க் இருக்கு? ஒண்ணுமே இல்லை. ஸோ இஃப் இட் இஸ் கோயிங் டு ப்ரொடியூஸ் லெஸ், the acquisition is going to be less. If it is going to produce more, the acquisition is going to be more. Assume, for example, today I do not even produce, then also no problem. If I'm going to produce more, then also no problem. So basically, the risk which is taken by this entity, Indian entity, is very less, which is known as low risk entity. Upper we'll take a reverse scenario. Assume, for example, there is an Indian entity, there is a foreign entity. Foreign entity has the intangibles. Indian entity produces the goods and sells it in the market. Foreign entity holds the patent. Indian entity produces the goods and sells it in the Indian market. Assume, for example, my product quality is not good. Is this product going to be purchased by the people in the market? No. I have produced more. Will the market absorb everything whatever I have produced? No. Here, does the entity have a higher risk compared to the first situation? That's it. So that is the difference between a low risk manufacturer and a high risk manufacturer. I will say that does he have the proprietary risks அப்படின்ற ஒரு term கூட யூஸ் பண்ணுவாங்க in the industries, right? So that being the case, generally cost plus method is used only in cases where there is low risk involved, right? Next, it is not involved for a full-fledged manufacturer. அப்படின்னு ஒரு point last pointல போட்டு, that is primarily for the reason that full-fledged manufacturer has higher risks. அவ்வளவுதான். So this is in relation to cost plus method. So the risk part of discussion might be tested either in theory or in MCQs and not in the big problems, right? So how should I compute the arm's length price in CPM method? So first I should identify whatever is the direct cost, and I should find indirect cost also. Both direct and indirect I should add, and also I should add the gross profit margin. And the fourth point is common across all the transactions, the functional or other differences between transactions or enterprises. அது ஏன் ஒரு இடத்துலயும் அது வருது அப்படின்றத let us understand. நம்மளோட போன இதில் what is the resale price methodly in the this point was there. Even in CPM this is there. Why is that so? Because this GP margin which we are adding is not the GP margin of the entity, but it is the comparable GP margin. In the GP margin வந்து company என்ன earn பண்ணுச்சோ that will not be taken. It will be taken based on the industry standards. Okay, wow. So assume, for example, you are there, I am there, we are related. There is one third person, Sudarshan, he is unrelated, for an example, right? So that being the case, the transaction between you and me is being tested. Transaction between you and me is tested. That being the case, how can you take the margin which is earned between the transaction between you and me? We cannot take it. Yeah. So there is Sudarshan. He is also doing similar transactions, and in a similar type of transactions, he earns 15% margin. What does he earn? 15% margin. அப்போ அந்த 15% margin தான் இங்க எடுத்துட்டு வந்து போடுவோமே தவிர we will not take the 10% margin which is earned between you and me. So whatever margin Sudarshan is earning, that is to be taken here and not the margin between Karthik and you. Clear? So that being the case, இப்போ நமக்கும் உனக்கும் there is a relationship, and I and Sudarshan does not have any relationships. But what is happening for a transaction between you and me, you will give the cost, what to say, the price. இப்போ நான் வந்து 100 rupees கொடுக்குறேன்னா the 100 rupees you will give it to me the same day. But what Sudarshan does is, if he is going to sell a similar good, but he is going to receive the money after 1 year. He is going to receive the money after 1 year. Or take another example. So I am giving to you this mouse. Okay, இந்த mouse நான் வந்து உனக்கு கொடுக்குறேன். Sudarshan என்ன பண்றான்? He is giving the mouse plus this mouse pad. He is selling both of these. அது ரெண்டுத்தையும் செல் பண்ணி அவன் 15% மார்ஜின் earn பண்றான் அப்படின்னா இந்த மவுஸுக்கோட மார்ஜினை மட்டும்தான் நம்ம கண்டுபிடிக்கணுமே தவிர we should not take the profit margin which is earned by Sudarshan for this specific mouse pad. Okay, so அதனால whatever differences is there between the transactions or the enterprises, that needs to be eliminated. That is the point which is given in point number 4. After doing all these three adjustments, whatever we get is the arm's length price in the cost plus method. Here also, internal cost plus is also possible. External cost plus is also possible. இது நம்ம முன்னாடியே பார்த்தோம், கப்புக்கு பார்த்தோம். Internal cup is possible, external cup is possible. But for resale price method, that is not possible. Again, for cost plus method, both internal CPM and external CPM is possible. Right? Next, when can cost plus method be used? It can be generally used based on the books, but this is not an exhaustive list that I tell you. This is not an exhaustive list. This is just an illustrative list. Right? So, wherever there is provision of services, joint facility arrangements, transfer of semi-finished goods, long-term buying and selling arrangements, in all these cases, CPM can be used. Right? It is not. It must be used. It should only be used in this transactions. இது just சும்மா ஒரு illustrative list example அப்படின்னு போடுவோம் பத்தியா அந்த மாதிரி. Okay, so with this the CPM method is done. Now let us go to the next method, which is transactional net margin method. நடுவுல profit split method னு ஒரு method இருக்கு. I'm just omitting it intentionally for the time being. I'll tell you why later. Right? So let us just அப்படியே நம்ம முன்னாடி படிச்ச மூணு மெத்தடை ரீகால் பண்ணுவோம். ஃபர்ஸ்ட் என்ன படிச்சோம்? Comparable and controlled price method. அதில் transaction price determine பண்றோம். What is the second method? Resale price method. In resale price method, what are we determining? The purchase cost. Next is cost plus method. In cost plus method, what are we determining? The sales. So, இப்போ இந்த மூணுமே what are we leading to? We are going to arrive at a proper profit margin where in most of the cases, the profit margin is going to be GP margin, gross profit margin, right? But after GP, arriving at GP, I'll deduct multiple expenses, I will add non-operating revenues and arrive at net profit. Correct? இப்போ assume for example, நம்ம என்ன பண்ணணும், இந்த GP margin நம்ம கண்டுபிடிக்கணும்னு சொன்னோம் from a similar type of transaction. Assume there is no similar type of transaction. I am selling cycles to you. Nobody in the world is selling cycle to a third person. வெறும்னே எல்லாருமே இண்டிவிஜுவல்ஸ்க்கு தான் விற்கிறாங்களே தவிர no company is selling cycle to another company. How will you determine GP margin? Another example. Assume for example I am selling you cycles with 4 wheels. I am selling cycle to you with 4 wheels. 4 wheel cycle enga sir irukum? Go to Kodaikanal, you will see. That is possible, right? So 4 wheels irukka cycle na unakku vikkiren. But all the other companies in the world is only producing cycle with 2 wheels. Can we say these two transactions are comparable? An apple should be compared only with an apple. It cannot be compared with an orange. Correct? So at all the places, I might not be able to get a comparable. In the GP margin is based on comparable. அதே மாதிரி இங்க ALP methodல this GP margin is based on comparables. Based on comparables, comparable companies. Right? அங்க எனக்கு comparable கிடைக்கலனா, if I am not able to get a similar transaction, if I am not able to get a similar transaction, what will happen? Then I will not be in a position to compute it, right? Just now come back to our methods நம்ம டிஸ்கஸ் பண்ற சேவ் பண்ணிட்டு இருக்கோம். Transaction based method, profit based method னு சொல்லிட்டு. What is the significance of this transaction based methods? அப்படின்னா, in all these places, what is tested is only the transaction and not the entity. General transaction என்ன? Transactionோட end point என்ன? Gross profit. இந்த மூணு இடத்துலையுமே basically இதில் profit involve ஆகிற two places, resale price method and cost plus method. In both of these places, we were testing gross profits. Gross profit is only for a transaction, only direct cost involved. So that is the reason why it is known as transaction based methods. What can we achieve using this transaction based methods now? Once my gross profit is at arm's length, once my gross profit is at arm's length, all the other expenses and income is not going to tamper my arm's length gross profit. Gross profit fixed. அதுக்கப்புறமா நான் whatever add and less I do, I don't have a problem. I'm going to arrive at arm's length net profit. Because transaction லெவல்லையே நான் வந்து கரெக்டான gross profit determine பண்ணிட்டேன். But if I am not able to do it, I am going to go for profit based methods. What I'm going to go for? Profit based methods. So generally in transaction net margin method, what is compared is profit level indicator. இதுக்கு முன்னாடி இடத்துல நம்ம பிரைஸை கம்பேர் பண்ணோம், ஜிபி மார்ஜினை கம்பேர் பண்ணோம். இங்க PLI will be compared. What is PLI? PLI is nothing but a profit level indicator அப்படின்னு சொல்லுவாங்க. So in the numerator we will have some form of profit, either gross profit, operating profit, net profit, something. கீழே பேஸ் வந்து can also be anything, cost, sales, asset, operating cost, anything. So whatever we are going to do is we are going to compare this PLI of my company, with the PLI of a similar company. I'll put it other. Why is that TNM method? Assume for example you are purchasing. There are 1,000 purchase transactions from 50 different associated enterprises, different products. There are 20,000 sales, 20,000 unit sales to 15 different countries at 15 different prices. How will you at practice compute ALP here? So if you are going to use all the methods which are mentioned above, it should be for a single transaction or a transaction with at least a specified entity. That cannot be done here, right? How can you do 20 here, 15 here, the two multiple units, multiple countries, multiple currencies? How will you find comparables first? Right? So instead of finding comparables, profit levels for each and every transaction, instead of testing each transaction, we can test the entity itself. So whatever we are going to test is known as the tested party. Okay, wow. So this is the reason for TNMM. Right? In TNMM, generally PLI is, most of the cases, what PLI will be there is operating profit divided by operating cost, OP by OC. This is widely used in the industry. Right? There are also other profit level indicators such as net profit before tax to sales, cash profit to sales, EBIT by sales, operating cost profit divided by operating revenue, earnings before interest and tax divided by assets, EBT divided by shareholders funds. What should be used, sir? In exam they'll give you. In practice you decide. In practice you have you have all the right to choose any numerator, any denominator, but that should be logical. If I assume for example I am highly capitalized entity, I am invested something huge capital on machineries, right, and everything of that is from the own funds, then I can use EBIT by assets. I can. It is not I must, I can. If I assume for example I am a consumer based entity or consumer facing entity, I can use net profit before EBIT divided by sales. I can use. Right? So whatever the company values the most, whatever the company feels the most, can be used as profit level indicator. Right? Next, here also both internal and external TNMM is possible. So where and all can we use TNMM method? Generally in industry, what will happen is, if I'm not able to come at the top 4, go to TNMM. Right? But there are multiple judicial decisions which says that TNMM is not a residual method. TNMM is not a residual method, is what the judiciary's view is. But practically what we'll do is, if you are not able to find it under any other method, we'll go for TNMM. right? So if you just see here, when and all TNMM can be used, provision of service. அதுக்கப்புறம் இந்த மூணுமே பார்த்தோன்னா when I cannot use RPM, I should use TNMM. When I cannot use CPM, use TNMM. When I cannot use PSM, use TNMM. Right. Oh, let us take an first let us understand what are all the different methods of TP now using our 12th standard final accounts. Okay. Fine. This is trading account. This is P&L account. Okay, let me draw it a bit better. Sorry. Yeah. Trading account, P&L, trading. Okay, totally there are two accounts. So what is the purpose of TP? What is the purpose of TP? The country should not lose its tax revenue. Correct? So my PBT less, just a minute here, sorry, minus tax. இப்போ இந்த tax is based on the PBT. கரெக்டா? இப்போ என்னோட இன்டென்ஷன் என்ன? This PBT should be at arm's length. அவ்வளவுதான். கரெக்டா? Assume for example, my international transaction is a purchase transaction. Purchase transaction. What methods can I use? So இப்போ இந்த purchase வந்து arm's length இருந்துருச்சு அப்படின்னா my PBT is going to be at arm's length because this purchase is going to reflect in my GP and this GP is going to come here, GP, and this GP is going to have an effect on this PBT. Correct? So my purchase price should be correct. If my purchase price 100 க்கு பதிலா 120 இருந்துச்சுன்னா my PBT is going to be less. So this purchase price is to be correct. So இந்த purchase price correct இருக்கிறதுக்கு நான் என்னென்ன methods of TP use பண்ணலாம்? What methods can I use? Can I use cup method? Obviously. Then can I use totally two methods? One resale price method, அப்படி இல்லைனா cost plus method. So இங்கே வந்து we can use only resale price method. Okay. Next, there is sales. That is also to one associated enterprise. இப்போ இதுக்கு what methods can I use? Cup method as usual. What other method can I use? If assume for example in the purchases வந்து is from third party ன்னு ஒரு எக்ஸாம்பிள் வச்சுக்கோ. I can use cup method and also I can use cost plus method. Correct? So if the sales is going to have an effect on my GP and the GP is going to have an effect on my PPT. இப்போ இந்த மூணு மெத்தட் இஸ் known as transaction based methods. இது மூணுமே எங்க அஃபெக்ட் ஆகிறது பாரு, ட்ரேடிங் அக்கவுண்ட். ஓகேவா? Now let us come to TNMM method. In TNMM method, what am I going to determine? Instead of determining this purchase, instead of determining the sales, I am directly determining arm's length PBT. Okay, wow. Instead of me determining arm's length purchase, instead of me determining arm's length sales, I am determining arm's length PBT. இது வந்து TNMM. Sir, அப்போ இன்னொரு மெத்தட் இருக்கு சார். There is a different method. We'll come to that separately. This is the relationship between these four methods. Cup method, RPM method, CPM method, TNMM method. Cup method and RPM, CPM. All these three will generally be used in trading account. ஆனால் கப்பு பொறுத்த வரைக்கும் there is one peculiarity with cup method is what is you can use it for any type of international transaction. இப்போ assume there is a loan. லோனுக்கும் கப் மெத்தட் யூஸ் பண்ணலாம். லோனோட இன்ட்ரெஸ்ட் வந்து P&L எஃபெக்ட் ஆயிருக்கும். அதுக்கு you can use cup method. There is no bar on using cup method. Okay. It is for any specified transaction, whether it be in trading or in P&L. And RPM, CPM both can only be used in trading. T&M only in P&L mostly. Okay. So this is the different methods, the identification, like relationship between four methods of transfer pricing: cup, RPM, CPM, and T&M. Now let us go to the fifth method of transfer pricing, which is profit split method. So as far as profit split method is concerned, it is used in a transaction where profits are earned combined. If assume, for example, Karthik is there, Sudarshan is there. Karthik knows tax, Sudarshan has an academy. Both of us come together, teach students, make profit. Okay, he has place, I have knowledge, he has reached to the students, both of us are coming together, we are making profit. We are related enterprises. Assume, for example, I am in India, Sudarshan is in Australia. Okay, இப்போ இந்த கேஸ்ல what will happen is both of us has come together and earned a profit. இந்த profit it is to be split. அவ்வளவுதான். Instead of determining the sale price and all, here how will you determine sale price? Sales is made to third person. How will you determine? It is not possible, right? அவ்வளவுதான். இதுதான் profit split method. So this profit which I and Sudarshan earned together is to be split in a proper ratio between Karthik and Sudarshan. That is profit split method. Splitting combined profits of a transaction between related enterprises in a similar way as to how independent parties would under comparable circumstances. If I assume, for example, I and Sudarshan are close friends. Assume, for example, there is also a third person, A and B. In India, one is in Australia. In a similar type of transaction, what they do is, the Indian person takes 60%, the foreign person takes 40%. அப்போ அதே ரேஷியோவை இங்க அப்ளை பண்ணி வாட் எவர் கம்பைன்டு ப்ராஃபிட்ஸ் which is earned together by Sudarshan and Karthik will be split. That is known as profit split method. And in profit split method, most of the times operating profit is split, but even GP can be split at times. That is not a problem. So next point is it is to be applied when both the sides of the controlled transaction contribute to significant intangible property, or profit is earned by significant contribution of both the entities. இந்த செகண்ட் பார்ட் தான் நம்ம இப்போ டிஸ்கஸ் பண்ணது. கார்த்திக் இஸ் இன் இந்தியா, சுதர்ஷன் இஸ் இன் ஆஸ்திரேலியா. அந்த சிச்சுவேஷன் தான் இந்த செகண்ட் பார்ட். ப்ராஃபிட் இஸ் earned by significant contribution by both the entities, India and Australia. What is the first part, sir? Very simple. If assume, for example, Karthik has an idea. Okay, Sudarshan also has an idea. We both of us come together and we are creating a software for cost accountants across the globe. Cost accountants across the globe க்கு நாங்க என்ன பண்றோம், ஒரு சாஃப்ட்வேர் கிரியேட் பண்றோம். How to determine cost of a product. So if you just put in certain details, it will give you the cost. அதுதான் எங்களோட ஐடியா கான்செப்ட். நாங்க ரெண்டு பேரும் சேர்ந்து we are building an intangible. We are building a software. After building that software, we are selling that software to third party, or we are internally using it, something. It is a unique intangible. Nobody has thought it. It is very noble and also novel. Nobody has done it. In such situation, whatever profit is earned through sale of that intangible, it should be split between us. That's the first point. Controlled transaction contributes significant intangible property. Otherwise, I and Sudarshan together developed a software, and what we are doing is we have network of companies across globe, and we are using this software internally. What are we doing? We are using this software internally. Internal panna, there is not going to be any profit at all. Even in such situation, profit split method is to be used, and we should determine the notional profits and the money. So next one, what are the methods of allocation of profit? There are totally two methods. One is total profit split, and the other one is residual profit split. இதை ரொம்ப சிம்பிளா சொல்லி முடிச்சிடுறேன். Assume, for example, your mother has 5 children. Okay, உங்க அம்மாக்கு 5 பசங்க. நீங்க என்ன பண்றீங்க? You are doing parotas for example, right? There are 5 children and the 5 பேரும் சேர்ந்து என்ன பண்றீங்க பரோட்டா மேக் பண்றீங்க. So first child goes and gets the maida, போய் எல்லா பர்ச்சேஸஸும் பண்ணிட்டு வரான். Second guy, what to say, he is I'll just put it in Tamil itself. அவன் பேசஞ்சி அந்த மாவை பர்ஃபெக்டாக ஒரு பதத்துக்கு எடுத்து வந்து வச்சுடுறான். Third person, he is beating the parota and making it as parota. Like அந்த மாவு ஊர்ன மாவை எடுத்து he is spreading it, beating it, making it as parota. Fourth person puts it in the tawa. Fifth person takes it from the tawa and puts it in the dabba for you to eat. Totally there are 5 people. Okay. So இப்போ நீங்க 5 பேரும் சேர்ந்து என்ன பண்ணிருக்கீங்க? You have made 25 parotas. 25 parotas, 5 people. What will you do? Take the 25 parotas, split it across everybody. Okay. So the person who went to it need not be equal also. It need not be equal. There is no condition that it needs to be equal in total profit split. But this 25 will be split in a single stroke. What will the first person say? I am the first person. நான் தான் கடைக்கெல்லாம் போயிட்டு வரேன், அதனால எனக்கு 6 பரோட்டா வேணும். சும்மா ஒரு எக்ஸாம்பிள். The fourth person who was putting it in the tawa says, I have split more than the person 2 and 3. I want 6 parotas. Granted. 6 plus 6, 12. Okay. And second and third person says, I want 5 parotas. Okay. நீங்க ரெண்டு பேரும் ஈக்குவலா ஒர்க் பண்ணீங்க. You are working outside the tawa. So 5. Okay. Done. 10 plus or 12. Okay. 22. Remaining 3 parotas for the putty person who took and put it in the dabba. இது வந்து ஒன் ஸ்டோக் அலோகேஷன். டயர் 2 அலோகேஷன்னா எப்படி அப்படின்னா யுவர் மதர் இன்வால்வ்ஸ். ஓகே. ஸோ ஃபார் எவ்ரிபடி ஹஸ் டன் சம் ஒர்க். கரெக்டா? ஸோ உங்களுக்கு பசி தீர்றதுக்கு ஃபர்ஸ்ட் நான் என்ன பண்ணுவேன், எல்லாருக்கும் 2 பரோட்டா கொடுப்பேன். ஃபார் ஆல் யூ டு கெட் யுவர் டம்மிஸ் ஃபில், I'll give you 2 parotas each. After that, how many parotas will be remaining of the 25? 15 parotas. 15 parotaவை 6:5:5:6:3 அதில் பிரிச்சுக்கோ. Okay. அது 2-tier approach. First step, what I'll do is, based on FAR analysis, a basic return is given to each of the enterprises. A basic return is given to each of the enterprises. After that, residual profits, remaining 15 parota, is shared based on contribution. What is the contribution? நான் இவ்வளோ ஒர்க் பண்ணேன், 6:5:5:6:3. That is the ratio. Okay. So this is a good example for us to remember 2 methods of allocation. Right? First one, total profit split. It should be based on combined net profit, total parotas. Evaluate relative contribution in FAR analysis. FAR I have already said, functions perform, asset employed, and risk assumed analysis. This is one of the major part of your transfer pricing study. Once you qualify, you just check the transfer pricing study. It will be this bulk. It will be a very good document also to read. So what are all the functions performed by each of the associated enterprise in this transaction? What is the asset employed by one entity in the other entity? What risk that does the entity take? Does it take foreign currency risk? Does it have employee risk? Does it have asset risk? Does it have collection risk? All those things will be discussed in detail. Based on that, the net profit will be split. That's the first part. Second level, after the profit is earned, first a basic return will be given. After basic return is given, the residual profits are based on relative contribution. Relative contribution and the first level, that is 6:5:5:2, and the relative contribution is split up. And 6:5 just for your example, so I'll put it this way. So whatever is used in one stock allocation, that is to be used for residual profits. Okay. So this is the broad understanding of the 5 methods of transfer pricing. I'm not getting deep into the other method of transfer pricing because that is more used in the practice than in the exam. So I'm not touching much upon it. So in the next video, we'll just brush through a few of other concepts and also go to the APAs. We have APAs to discuss, secondary adjustments, thin cap adjustments. All those things will go. Right. So for the time being, we'll end this video. I will continue in the next video. So whatever doubts you have, please post it in comments, or you can message it in the WhatsApp group which is specifically created for this purpose, and we'll be very happy to take that. Thank you. Bye bye.